right? You're waiting for liquidity to create itself, right? Equal lows, because we're in a downtrend, right? So what that means is when there's a double bottom, people are buying when it comes down into this zone, right? Let's draw the zone. People are buying when it comes down into this zone because of the double bottom, okay? So that means people's stop losses are below these lows, all right? So we're patient. We wait for the market to do its thing, right? So as the market comes back for maybe that triple top, we're waiting for smart money to show themselves. We're waiting for smart money to stop people out and then push back in the opposite direction immediately, right? If it's slow, that means if the market kind of just consolidated right here and there was no push in one direction, then guess what? Smart money has not gotten into the move yet, because the market will move when smart money is in the move. So you wait for smart money to push the market to the downside, right? So it can simply just stop everybody out, hit everybody's stop losses, and also activate sell stops. People who think, oh, if it breaks past this, people who think, oh, if it breaks past these lows, it's going to continue on that downward trend, right? Which it is. Hold on, where am I at? Okay, yeah, which it is it's going to continue on that downtrend. But as the market is trending, it's always taking liquidity left and right. For the banks to play, they need to always accumulate liquidity, so there's money to be fluctuating into the market, right? So that's how you're able to catch buys on a smaller time frame when the overall direction is down, okay? So as you wait for liquidity to be created, you wait for that down candle to hit all the stop losses, right? People may ask, because people who are a little more advanced, the sniper entry is right here. However, you could only snipe that if the past was telling you, it had something going on over here telling you that was a good area to buy, right? You always have to look left to go right. So if I didn't see anything to the left for me to enter down here, that's not my area to enter at, right? I'm waiting for that down candle before the up move. So if you see smart money get in the market and push it down, and then immediately see the smart money push it back up, they sell to buy and buy to sell, vice versa, right? Like I always say, retail traders buy low and sell high, right? Smart money concepts buy lower and they sell higher, right? Everyone's buying in here, well, we're gonna buy down here. But you gotta look left to go right, okay? So since we didn't catch the market down here because we didn't see any evidence to the left telling us to enter, we simply wait for smart money to continue to push us up, okay? Because as soon as you see something like this is the schematic, right? This is the liquidity, and then the liquidity being captured and then money pushing in the opposite direction, all right? But then now we have our areas where we can look to enter, right? You look at the last down candle for the up move. This trading strategy is so simple, in my opinion, right? The last down candle for the up move, that's your area where you're looking to enter, right? You take the top of the body of the candle and then 50% of the body, right? You can measure it out with the Fibonacci tool. I always feel like I'm pretty accurate just looking at it, so I just do it with my eye. I just try to save time. So now that's where I'm looking to enter. And I stop. That's where I'm looking to enter. So as the market comes back down to this area, we're looking for this same exact thing to happen right here, right? What I mean by that is you wait for liquidity to create itself right above your areas of entry, right? We're looking to enter either at this pink line or at this pink line for the buy, right? Wait for that liquidity to show itself. So it induces buyers. And then the same thing's going to happen, guys. It's fractal. They're going to sell it to hit everyone's stop losses. What's up? And then go back up to the upside. Right? Same thing. That was you?
Yeah.
What did you say? Bet. All right, so I'm going to show you how we were able to catch this. Oops. Catch this right here. Right, a nice 70 pips for New York session, for those of you guys who are on the call. Right? It's pretty simple.
You need to be on these lives.
Yeah, so guys, so everyone knows, for those of you guys who haven't seen the schedule, Friday nights is a weekly recap of some trades we called out for the week. Sunday is going to be what we're looking at for the week to come, right? Friday and Sunday are 11 p.m. Eastern time. Tuesday and Thursday, 6 a.m. Eastern time, to kind of see what London session did coming into New York session. So we'll be dropping those calls
Every week.
All right, so it's kind of hard to see on the hour, but as I break it down to smaller time frames, you guys are really going to see what happened and how I was able to catch this. Okay, so if we're just looking at the market, you can see what happened, right? Actually, let me get my arrow. All right, this right here, just inducing buyers, right? The market went up a little bit, but came down, tanked. Right, people see the market come down right here, shoot up quick, right? They start buying. It just drops, right? But what happened right here was very key. It stuck out to me like pretty clearly. Right, actually, let me redraw this real quick. Right, because pretend right now, I don't want to replay it, but pretend you can't see this right here. You can't see any of that. All right, so what I saw right off the bat was this crystal clear, perfect double bottom, right? This double bottom, just inducing buyers, right? People are buying this because it's on such a heavy downtrend that people are just wanting to catch the big swing up, right? But it's just taking liquidity until it really wants to do that thing, okay? So as you can see, right, what I always preach, what I always tell Q is this right here. Right, I don't know if you guys can see it, but it's your confirmation checklist, right? It needs to always be by your side when you're looking at the market.
Your rules,
your trading plan, your confirmation checklist is key, right? I don't have mine in any particular order, but I'm looking for at least 4 confirmations to happen before I enter into the market. Okay, I'll read them off for you guys so you guys can know what mine are. They're not in any particular order, but my confirmation checklist is 1, the point of interest candle, right? The candle that did that thing, the FU candle, whatever you want to call it, right? I need to see a clear point of interest candle, right? I need to see liquidity being captured by that point of interest candle. That's 2. 3, the overall direction of the trend. 4, Fibonacci's, right? Buying price at a discounted price. 79% to 88% is where I like to buy, right? I know we all love, the 50% off, 30% off. I like 88% off, right? So, and then last but not least, the most important is price and time. Price and time. The trading window is key, 3 a.m. to 10 a.m. All right, so we simply have liquidity right here, okay? I'll delete this. When I woke up, actually, I don't know if I went to bed this day, but I woke up and the market was like right here, right? 2 a.m. 2 a.m. Oops. Let me check the chat real quick. Oh, it's cute. All right, so it's 2 a.m. So what did I do, right? Because I saw a wick that captured the liquidity, but I really wanted to see, were they full bodies? What was really going on the smaller time frame? So as I go to the 15-minute time frame, right, you can see what happened. Let me actually delete this. You can see what happened. This was that hour candle, right? 2 a.m. is right here. 2 a.m. is right in here. Okay, right? And what I saw was I saw the market go down right in here, and then we saw this up candle right here. Right, this white candle right in here was simply doing what? It was inducing buyers, right? If I drag this across, you can see right in this area, it was just inducing more buyers. But then we had the market just spike down all of a sudden, right? Right at the beginning of London. This candle is the 2:30 a.m. candle, right? It came down, it captured the liquidity. Anybody buying here, they were just stopped out. And then right after that last down candle, we immediately shot up. Boom, right? Big bullish candle after big bullish candle after big bullish candle, right? But what did Q say 20 minutes ago? You need to identify targets because targets are just as important as anything else. Actually, I didn't say that, but I need to put it on there. Targets. As the market came back up in here, what did it do? It created equal highs, right? This was my first area I was looking for take profit, right? Because people who are selling up here, people see this, people see this, people see the overall downtrend. People are selling right here. There's stop losses up in here, right? People are thinking it's just going to continue to go down, right? This is what we call wiping both sides of the board. It shot down to wipe out the buyers, and then it shot up to wipe out the sellers. Okay, it took liquidity on both sides. But what I saw was this down candle before the up move, and then I saw liquidity being created to the upside. So I knew that the liquidity on the upside wanted to be taken out before we went on that overall downtrend. Okay, so now we have our point of interest candle. What do we do next? We go ahead, we draw our areas where we're looking to enter. Boom, body of the candle. Boom, 50% of the last down candle before the up move. Okay. So what happened was the market came up, came down. Initially, I did enter once right here, but the better entry was when we called the move live, right? And I'll show you guys why. The reason why is because when the market came up here, it did create some liquidity, but when it came up here, it created even more liquidity with all these wicks. When retail traders see all these wicks, they're selling, they're selling, they're selling, right? Then they see this nice 15-minute candle down, they're selling, they're selling. They see this nice, 15-minute candle down, next thing you know, boom, skyrockets, right? So what did I see here, right? I saw this point of interest candle, but I broke it down even smaller. I broke it down to the 5-minute time frame, right? And I really wanted to see what was that last down candle before the up move that really took the last little bit of stop losses, right? Which candle was it? What was the last one? I know this was the overall one, but the last one was this one right here. That was that last down candle before the up move. If I go ahead and I draw a line right here at that body, and then into the future, right, you can see what happened. It was clear as day, right? Remember the drawing I just drew, okay? We have, let me do this real quick. You have a double bottom, right? Then you have smart money takes it out, they sell to buy, okay? Our point of interest area is right here. As the market comes back to our point of interest area, wait for liquidity to create itself before you look to buy. The market came down here, came up, came back down. What is that? That's liquidity right here being created. You see that? It induced buyers. And then what do we have right here? That last down candle before the up move, that what happened? Came right down to that 5-minute down candle before the up move for zero drawdown. and a 100 pip gain for New York session, right? And price and time, you look at what this entry was, 7:05 a.m. For those of you guys who called it, I believe we entered like right in here. I mean, we might have entered in here off of the mitigation, came up, had to come back, right, to close out that sell to buy, right? Had to mitigate out of that before it continued up. All right, but you guys can see how clean it was. Like, if you guys don't see this liquidity right here, let me know. But it was clear as day as when it came back down to the point of interest area, it created liquidity. It stopped it out one more time, took everyone's stop losses before it made that move, right? Take profit one, you know, even if you entered right here, based off of the higher time frame, right? Stop loss goes right below that last down candle for the up move, right? You're risking, you know, 10 pips, right? To gain 40 pips, because that was that TP1, right? That was TP1, right? Then after that, we weren't surprised if it came down, but if you held it out for a little bit, right, you can see, boom, potential 90 to 100 pips.
You're not too.